Welcome everybody to Marsh Captive Upside 2020 webcast series, session number 7, if you can believe that. 2020 means it's just 20 minutes at 20 past the hour all throughout 2020. Can't believe we're at number 7 in the series, and I'm absolutely delighted to have Mike Siricchio and Lorraine Stack with me today. We are super excited to launch today's topic, which is all about our brand new 2020 Captive Landscape Report. So this is our report where we benchmark all the captives that we manage. We develop some themes and some trends throughout it, typically released around RIMS time, but we purposely this year delayed it given everything that the world has been going through so that we could try and be relevant and appropriate with the content. So the title of the report is Captives Offer Value in Uncertain Times, and boy, is that ever true. So we're going to give you some highlights throughout this session today in the next 18 minutes and give you a little bit of a tease, and then hopefully you'll see at the end of the session there's a link to click on. You can download the report. This year we're not doing any printed copies. It's all virtual like the rest of the world. It's a quick read, hopefully insightful, and we'll tease up a few themes for you today. So without further ado, I'm going to pose the first question to Mike. Boy, has it been a crazy first few months of the year, Mike. We've seen an explosion in captive interest. Tell us a little bit about that.
Sure, thanks, Ellen. So certainly unprecedented growth numbers for these unprecedented times. So 76 new captives formed this year. So approximately 200% growth in our last year's numbers. And this really just shows you, so during COVID, during the lockdown, regulators stepped up, companies stepped up, captive managers stepped up to form these captives to kind of support the business units. And the reason that you saw so much growth is that captive owners and companies that were forming these new entities saw the value in this challenging market, needed cost savings, needed liquidity, needed formalized funding, needed a captive to kind of get through these times. And really this growth was from all size organizations across all industries across the globe. So just very unprecedented, but just shows the viability of captives now and also into the future.
Yeah, terrific. We're going to talk a little bit more about the growth later on in the session, but that tees up the sort of a big key theme really that we're seeing in our industry this year at least. One of the themes that we focused on is a hot topic that everybody wants to hear about, and that's around domiciles. So what were we seeing in the domiciles? What were some of the domicile regulators seeing? And so we went out purposefully and surveyed a significant number of domicile regulators. And they came back. We asked them a question really, what's key theme and trend are you seeing? What type of business are most people more interested in writing in their captive in today's world versus maybe 5-10 years ago? And you can see from this chart, it's really different. It was staggering, in fact. If you look at the first, well, all of them actually that are listed right there, you wouldn't have expected to see them 5-10 years ago. Cyber, up 30%, employee benefits up 27%, professional indemnity 21%, environmental 9%, terrorism 6%, property, tenant liability. That last one's almost a little bit misleading because it's really growing, that one, and we can see more of that probably in the future. But super interesting, and I think we're going to start to see more and more of this. And the more established domiciles, I think, are going to have typically a bigger captive base, so they're going to have more information to pull from than perhaps a newer domicile as well. But there's a heck of a lot of captive domiciles out there. Michael and Lorraine, I'm not sure, you didn't know I was going to ask you this question, but I'm not sure how many actual domiciles there are in the world. It's something in the close to 100, I'm sure. But we've got a good mix here of where our survey of our global regulators took us. So that's very interesting. Also, what we did this year, I mentioned earlier that we delayed the report on purpose. So we wanted to gather some information about which captives may be writing some form of pandemic risk, which we didn't anticipate needing that answer last year, of course. Mike, we had some really interesting research on this subject. Talk us through it.
Yeah, absolutely, Ellen. And similar to what you just said about cyber growing in captives, if you think about cyber and pandemic is probably going to look a lot like cyber. So 15 years ago, you probably had 10 or 20 captives writing cyber. Now you've got huge growth. So we had to speak about pandemic risk. We had to do research about how many captives are actually writing pandemic in their captives pre-COVID-19. And we found that the number was about 25 globally. So you had a few in the United States, a few in Dublin, a few in Bermuda, Singapore, and also some other locations. So they were doing this for years before the pandemic hit. So they were doing business interruption, contingent business interruption. They were being proactive and creative in these industries where we've got some hotel clients, some hospitals, some retail, real estate, working on, funding, formally thinking about this. And I think that, as we just talked about cyber a bit, pandemic may be the next cyber in terms of it may explode into the future. We're working on many initiatives for 2021 and beyond. We're going to talk a little bit later about some public-private partnerships, but this just shows you the captive owners were thinking about it, they implemented it, and we know that this is going to continue.
Yeah, and so Mike, just in terms of the type of coverage, they're writing deductibles, quota shares, a mixture of things, or were they just simply funding and building up a reserve to allow them to have a slush fund for the rainy day, which was this year?
Yeah, so for the most part, it's the latter. So it's basically fully funded captive with a premium for X amount of limits for relatively lower limits. I think one of the larger limits we saw was about $50 million, but it was proactive thinking, but it really was just formalized funding, no reinsurance, just formally in their own captive.
Got it. Okay, and probably going to see more of that when we pull the numbers for next year, I'm sure. Okay, I teased up the premium growth. We talked about the number of new captives that we've seen in Marsh Captive Solutions this year compared to last year, but we've also had a lot of growth, which I didn't realize I was going to have this slide, so I'm just going to pivot again. And we're going to talk a little bit, before we get onto premium growth, we're going to talk a little bit about how captives have helped free up some cash. So Mike, you can talk a little bit about this one also.
Yeah, sure. So this $3 billion number is the amount of liquidity that was extracted from our captives in March and April and into the future. So it just shows you that captives, it's a testament to the captive industry that the captive provided that's needed support to the parent company, because in March and April and May, cash and liquidity was so key that regulators responded, companies needed cash out of their captive. They were able to do it in a conservative way with intercompany investments. It supported the organization that basically owned the captive. In many instances, many months later, after they took those initial loans, the loans were paid back. So these captives did exactly what they were supposed to, and it shows that they worked well, and they not only garnered cost savings for the organizations for the last 10 or 15 years, but in this emergency, they did what they were supposed to, and they allowed the owners to get the needed liquidity that they had. And our captives returned about $3 billion in those months. Some are still outstanding, some are all paid back.
Awesome. Yeah, it was a really good success story. We've helped a number of captives, of course, captive owners extract liquidity from their captives and continue to use captives for these crucial moments. Clearly, I want to talk about premium growth, as I tried to talk about it already. So I'm going to let Lorraine walk us through a couple of these slides here. Lorraine, we've seen quite a lot, right?
We have, and before we sort of get to the big reveal on the premiums, let's have a look a little bit at what's happening in the commercial market, just to set a bit of context here. And this is the Marsh Global Insurance Market Index, and this has been computed back since 2012. And as you can see, in the second quarter of 2020, commercial insurance rates rose by an average of 19%, which is the largest increase since the index began. And largely this is being propelled largely by property rates, casualty to a lesser degree, and then D&O, of course, which is off the charts. exacerbated, of course, by this year by COVID-19. And, you know, Mike and I and yourself, Ellen, we're talking to placement people all the time from all parts of the business. And all indications are that this is going to continue for at least the next 12 to 18 months. So, and what I'd like, before we move on to the next slide, just focus on the center here, because we, you know, the premium growth that you're about to see on the next slide really is the growth between 2018 and 19. So really it starts when at single digit rate growth there. So that's important to note when we move on to the next slide for context. So Ellen, ta-da.
There we go. Big review. Yeah.
The big review. So here we have the premium growth, right? And I love this slide. We've often looked at percentages in the past, right? But the real story this year is the material numbers, the actual premium numbers in the traditional lines of insurance, as I mentioned about property. So look, 2.4 billion there in property. Casualty, 14% increase, but a 1.5% premium increase, which is huge. Some other observations on that one, we see, you know, pretty consistent increase there in medical stop loss. That's been very consistent over the last number of years. As a consultant, our consulting colleagues, we're dealing with a lot of trade credit requests at the moment and interest. Unsurprising given what's happening economically. And then another thing to point out there is the extended warranty there. So that's another one. We have a few projects going on both sides of the Atlantic looking at extended warranty, which sort of leads us on maybe to our third party business. So we spotted this last year. We actually highlighted this in our report last year, which was this growth in third-party business. And you can see it's grown there, 1.2 billion, and 18% of the captives we manage are writing some element of third-party business. And these are sort of related to customer exposure, so customers, intermediaries, and employees. And I guess there are a number of factors that are driving this. You know, you've got this search for new revenue growth, new lines of revenue. And obviously customers have so much choice now that companies are really looking to create more stickiness in that relationship and get more traction with their clients. So this customer business, such as affinity and extended warranties, then make such great sense. And also another thing that's driving that as well, extended warranty in particular, is that regulators around the world are starting to change their attitudes in the nature of what that business is, which is kind of pushing it into insurance. And of course, it's pushed into insurance as added cost. And that means that's, you know, adding an insurer or a captive into that mechanism can eliminate some of that. So that's where that's coming from. On the employees, you know, one of the heartening things, I suppose, out of COVID was to see how employers really pivoted and really tried to look after employees around the world in terms of benefits. And those with captives were able to at least help out where there were mismatches and lack of coverage and medical coverage and even indemnity coverage for employees around the world. But what we're seeing, what I'm hearing from our Mercer colleagues, is that there's a real pivot now in the EB world. The focus is not so much on the economics, it's more on, you know, delivering wellness initiatives to employees and digital medical programs as well. And, you know, funding for that is scarce. So this is where captive, once again, can come into play. Another area that we focused on, we actually looked at this in our last webcast, I think, which was about D&O. Another area where there's quite significant activity. We're really seeing a lot of activity here. Now, Sarah Downey gave really fabulous insight on what's happening in the commercial market in our last webcast. So, you know, I think, Ellen, you're going to tell us how to look up those past webcasts. Okay, that's important. So Sarah did a great job. So here are the cliff notes, I guess. Historically, right, D&O coverage in captives has been quite limited for that, Sarah said, right? So historically, rates have been very, very low, and there's been loads of capacity available in the market. So there hasn't been a reason really to self-insure. Now we have, of the captives that we manage, we have roughly about 40 that are writing some element of D&O, and usually that's side B and C, that's the entity coverage. But you know, the issue is that's crystallizing right now is really around side A, and that is where the entity cannot, for reasons either for cannot or will not indemnify a D&O, and that coverage is very important. So there's while a single parent captive might not be the best route for that, because we need some independence. A PCC could be a really nice fit for something like that, because a PCC, of course, it gives that arm's length aspect to that transaction. And there's a lot of activity on that D&O space. It's getting worse. You know, once again, it's like that this COVID fever that's all about. And increasingly, directors and officers are becoming exposed now to criticism about their handling of how the reaction was handled. And this is really leading to an increase in class action suits in the US and various other places. So there'll be more activity in this, definitely.
Yeah, I think you're right, Lorraine. I mean, we like to put our crystal ball out there, and I think we're going to see, you were right to point out that the single-digit market inflation pricing index that has led to this growth in captives. So who knows what the explosion could be next year when we start pulling these numbers. I think we're definitely going to see more sell activity, particularly for D&O, but also for companies looking for a quicker solution than setting up a single parent captive, accessing reinsurance, etc. So a lot of great things I think we can predict. Hopefully we're pretty good at our predictions, so hopefully we'll come.
We are. If the number of phone calls that we're receiving and the number of inquiries even come to fruition, then certainly, you know, we'll definitely see an increase there. You know, I mentioned about that securities class action, and that sort of reminds me of, earlier this week, I think on Tuesday, the UK High Court gave judgment on a test case on business insurance against 8 insurers, and it actually found in favour of insureds. So this has been, you know, closely watched. It's been closely watched by a lot of other countries as well, and may set some precedents. But it really brings into sharp focus that, you know, the need for partnership there between industry and governments. And, you know, as you mentioned earlier, Mike mentioned, I think there's a lot of activity going on with that right now. UK, you know, pandemic re, there's up in Europe, then there's talk about a pan-European resilience framework. So there's tremendous appetite and willingness to create public-private partnerships. And as you know, of course, captives have operated in this space and been members of these pools for many years. So it's likely that captives will continue. I don't know.
We hope so.
Yes, Mike, same thing, I'm guessing.
Yeah, thanks, Lorraine. So on this side of the pond, we're also seeing a flurry of activity around public-private partnerships. The key is that the major, very large captive associations in the industry are really behind a public-private partnership. They want captives to be included. They want to see the value. And although there's a lot of different proposals out there right now, there's a proposal that actually made it through the House called PRIA, but there's going to be changes to that, and that there's going to be other scenarios of pandemic solutions. It's really going to be a big year next year in terms of what will come to fruition. Will captives be able to take advantage of them? PRIA looks a lot like TRIA, and we know we have a lot of U.S. captives looking at TRIA and taking advantage of TRIA for those good business and risk management reasons. And 2021 is going to be a very interesting year because the industry, the organizations, the companies, they need some sort of pandemic solution.
Yeah, exactly. And so as captive owners listening on this call, hopefully you know what we're talking about, and you should certainly talk to your local captive association and government, and certainly encourage them to make sure that captives are included in whatever form this public-private partnership takes place, and wherever you're located. We're certainly hopeful of that. Okay, I think we're almost out of time. I'm not going to read this slide out, but there's some recommendations in the report. And perhaps more importantly, there's the link to our annual captive landscape report that you can access, and we'll be sending the recording around to everybody that's registered for today's session. You can download the report and read it at your leisure. If you have any questions or any feedback for our next webcast, please reach out to us. I believe that we've got one targeted specifically around medical stop loss. If you want to reference the D&O one or any of the previous 6, please use that link there, and you should be able to find recordings as such from the previous 6 sessions that we've done. Thank you very much for joining us. Enjoy the rest of your day and your weekend, and we'll see you next time on Captive Upside 2020. Thank you.